The Precious Metals Week in Review, May 20th, 2016. Brought to you by Precious Metals International. The U.S. Federal Reserve is once again in control of markets as their public statements and posturing once again led analysts and media pundits alike to begin speculating anew that an interest rate hike is on the table for June. The number of Americans filing initial claims for state unemployment benefits plunged by 16,000 claims last week to a new seasonally adjusted level of 278,000 claims. The previous week's data remained unrevised. The sizable drop in claims may bear out economists' projections that the timing of spring break for New York City schools may have been a large factor in the previous week's dramatic surge higher. Non-teacher school employees, such as bus drivers and cafeteria workers, are apparently permitted to file for unemployment when schools are closed for spring break, and many economists blame this factor alone for the previous week's 20,000 claim surge. Retail earnings continued to disappoint this week, for the most part, which set the retail sector up for its longest streak of weekly losses since 2008. If the retail sector closes lower for the week again on Friday, that will make 5 straight weeks of losses. The news came on the heels of the release of the Federal Reserve's meeting minutes on Wednesday. The minutes, along with public comments made by Fed officials since the conclusion of that meeting, seem to point to a Federal Reserve that may be closer to enacting another interest rate hike in June, in spite of global macroeconomic evidence and analyst opinions that such a move could be a serious mistake. An Egypt Air flight, which left Paris for Cairo early Thursday morning, disappeared just after crossing into Egyptian airspace. Details are still sparse on exactly what happened, but the plane is believed to have crashed into the Mediterranean Sea, and the search continues for evidence of the flight. Egyptian officials said that they could not rule out terrorism as a cause for the disappearance of the plane. On Friday, the Egyptian military confirmed that they had located debris and some human remains believed to be from the missing flight, but as yet, the flight recorders have not been recovered. China stoked tensions over the South China Sea again this week when a Chinese official told reporters that the Chinese people do not want to have war, so we will be opposed to the U.S. if it stirs up any conflict. Of course, if the Korean War or Vietnam War are replayed, then we will have to defend ourselves. The comments were made by Liu Zhenmin, a vice minister of the Ministry of Foreign Affairs. Speaking further on the subject of rising tensions in the South China Sea, Liu said, "China attaches far greater importance to peace in the South China Sea, much greater than the U.S. and Japan. No one should doubt our sincerity in this subject. The Chinese government will uphold peace in Southeast Asia even for the sake of our own survival. In this sense, we are actively against any moves that will jeopardize peace in the South China Sea. No country would want to see confrontations between the U.S. and China because the Chinese and U.S. economy will be hurt, and impacts will be felt across the world." On Wednesday, 2 Chinese fighter jets intercepted a U.S. military reconnaissance aircraft which was carrying out a routine U.S. patrol in international airspace, according to the Pentagon. The Pentagon described the intercept as unsafe, and the Pentagon said that the Department of Defense was addressing the issue through military and diplomatic channels. The Financial Times this week, citing unnamed sources, said that Saudi Arabia is set to launch its first international bond in an attempt to help boost the country's finances after months of persistently low oil prices have caused it to burn through its cash reserves. Just last month, Saudi Arabia raised $10 billion through a 5-year loan it acquired through J.P. Morgan, HSBC, and the Bank of Tokyo Mitsubishi, so the bond sale will pile further debt onto that. Crude oil prices rose again this week, approaching $50 a barrel, as supply disruptions across the globe acted to put upward pressure on the price. In Nigeria, militants blocked access to ExxonMobil's terminal, which exports the country's largest supply of crude oil. Other militant activity elsewhere in Nigeria has also helped push crude production to 22-year lows. In Canada, the wildfire which continues to rage through the region's oil sands area has cut production by nearly 1 million barrels a day. In the U.S., a growing wave of bankruptcies among shale oil producers and the shuttering of oil rigs as prices have languished has seen U.S. oil production fall by more than 9.6 million barrels a day over last year at this time. Despite all the supply disruptions, high output levels in the Middle East will likely act to keep supply levels from slipping too far, and the global supply glut could continue. The euro spent the first part of the week drifting mostly sideways against the US dollar until the minutes from the Federal Reserve's last Federal Open Market Committee meeting to set monetary policy were released on Wednesday. Following the release of the minutes, which appeared to show a Fed that was leaning towards undertaking another interest rate hike in June, the euro began dropping lower against the dollar and appears set to close the week there. The Japanese yen spent the first part of the week drifting lower against the US dollar, and the move to the downside accelerated after the Fed meeting minutes were released on Wednesday. The yen found a floor by late Wednesday night and began drifting higher against the dollar, but still appears set to close the week to the downside. As the referendum on remaining in the European Union draws near in the United Kingdom, the political rhetoric is increasing on both sides of the debate. The outspoken former mayor of London, Boris Johnson, told the Sunday Telegraph that the European Union is following a similar track to Napoleon and Hitler in its creation of a superstate, and Prime Minister David Cameron countered by saying that Abu Bakr al-Baghdadi, the presumed leader of the Islamic State, and Russian President Vladimir Putin would probably both be happy if the UK decided to leave the EU. YouGov, who has been conducting polls on the outcome of the referendum, said on Wednesday that with 44% in favor of remaining in the EU and 40% in favor of leaving and the rest undecided, there is still no clear majority, and so the outcome cannot be predicted with any certainty. The U.S. Federal Reserve has once again sent markets into turmoil with the release of the minutes from its latest Federal Open Market Committee meeting to set monetary policy. The tone of the minutes suggested that multiple members of the Fed may be in favor of conducting another interest rate hike as early as June, despite pressure to hold off on raising rates due to the continued sluggishness of the global economy. Public comments by Fed officials this week have also led analysts and media pundits to once again begin projecting an increasing likelihood of a rate hike in June, which will only add to the chaos if the data-dependent Fed determines at its June meeting that global macroeconomic conditions still do not warrant implementation of another interest rate hike. The US dollar has already begun rising just on the rumor of a rate hike, and the US stock market began dropping as well, all of which will likely be closely watched by the Fed prior to the June meeting. The Fed is supposed to be unbiased, not allowing stock market moves to influence its decision, but it seems that in the intervening years of low to zero interest rates, the Fed and the stock market have become increasingly intertwined. The Fed appears trapped by the market reactions to its policies, instead of remaining a neutral, independent, and unbiased body that it was supposedly created to be. The political season in the U.S. will soon enter full swing, and the mudslinging will likely begin in earnest. As Trump and Clinton, the two likely candidates for the Republican and Democratic parties, weigh in and begin trying to discredit each other to the fullest extent, market volatility should be expected to continue. In such uncertain environments as those that are present throughout the world today, wise investors continue to purchase physical precious metals as part of a well-diversified investment portfolio. Temporary price dips for precious metals, brought about by heightened global uncertainty, provide these wise investors with the opportunity to acquire additional physical precious metals at a discount. Remember that precious metals should always be viewed as a long-term investment, and that the key to profitability through the ownership of physical precious metals is to actually acquire and own the physical products, and to hold them for the long term. Always remember that you should never overextend your ability to maintain ownership of your precious metals over the long term. The Precious Metals Week in Review, May 20th, 2016. Brought to you by Precious Metals International.